Hello guys, welcome back to my channel. For those who are new here and you haven't subscribed, guys, subscribe to the channel as you are finding value in these videos that I am posting every week, this content. So consider supporting the channel by just subscribing. It takes just less than a second, and also like my videos. As you find value, I'll be bringing you such content weekly. Okay, so today we are going to be looking at a strategy that I have used myself, and it is very effective. Increase your win rate if you use it correctly, if you are able to identify the confluences and also know when to enter the market and when to exit the market using this candle range theory. Okay, it's basically a theory that focuses on the range of a candle. All right, on a range of a candle, what happens during the range of a candle. It can be a 1 hour candle, 4 hour candle, weekly candle, daily candle, monthly candle. It can be even a 6 months candle. Okay, depending on what kind of trader you are. I am a day trader, so I focus on a 4 hour candle. Okay, on a 4 hour time frame, right? So that's what we are going to be looking at. I'm going to be using my example of a 4 hour time frame, but you can use yours of a 1 hour time frame if you are a trader who trades at much lower time frames. And you can also do from a daily time frame. If you are able to identify this candle range theory pattern on a daily time frame, then use that. If you are able to identify it on a 4 hour, then you can use that. But I'm going to use the example of a 4 hour time frame candle range theory. All right, so okay, the key levels at higher time frames, how to identify this CRT pattern with a clear purge. I'm going to be explaining what that is, and we're going to be looking at how we can enter at lower time frames, okay, considering the higher time frame candle range. All right, so we are going to be looking at also better confluence. When is it best to trade this strategy? When is it best to enter the market using confirmations like order blocks and fair value gaps? So basically, we are combining candle range theory and some SMC or smart money concepts and or ICT concepts, okay, to better profit from this strategy. You need the more confluence you have, the higher the probability that you will win. Okay, so how we can maximize and exit all positions at the end of the range of the candle. Okay, so this is what we are basically going to be focusing on. So when you look at the screen here, you can see we're going to start with in the situation where you are looking to buy using the candle range theory. So you can see this candle here. Okay, this first candle here, this first one here is a 4 hour candle from the bottom, okay, from the lowest price of the candle to the highest price of the candle there. Okay, this is the range we are talking about. Okay, from this lowest price of the candle, this is the lowest price of the candle, and it's a 4 hour candle. This is the lowest price of the candle to the highest part of the range. So in between this candle, we want to, this is the area where we are going to analyze and trade. Okay, just within here. Okay. So this is the candle. This is a candle range that we are going to be looking at, the 4 hour candle. So in this scenario, when you see a candle range pattern forming like this, okay, when you see a candle range theory pattern forming like this, right? First of all, you will see a candle range like this one, all right? And then you will see the next candle or the third candle, maybe the fourth candle even, creating a purge, okay, breaking below the lowest price here. This is the lowest price of the candle, but this next candle, as you can see, breaks below. That is what we call a purge. Okay, it's more like a liquidity grab, but yeah, more like a liquidity grab below this first candle. All right, so that's what we call a purge. So that is our first condition to identify a valid candle range theory pattern. Okay, so there is a purge below the 4 hour candle, okay, that we are focusing on to trade. So, but the price returns in that purge, the candle returns and closes within the range. As you can see here, the price closed within the range here. It purged below and returned and closed within this range, okay, to create a valid candle range theory pattern. So after the purge, okay, we look at where the purge happened. For us to trade, it has to touch into the higher time frame key level, like a support area. So this area would be a support area at a higher time frame than 4 hours. So the higher time frame than 4 hours would be a daily key level. So this has to be a daily key level. Okay. So in case this was, let's assume you are using a daily candle range. All right. This would be then a weekly key support. Oh, okay, or level. All right. If you are using a 1 hour here candle range, then this would be a 4 hour key level. You understand? Support level. Right. So since I'm using a 4 hour candle range, that is why my key level at a higher time frame is daily, a daily support. So this area here is a daily support, and the purge happened the moment this candle touched the support. Okay, at the daily time frame. All right, it immediately reversed into the range. Okay, it returned into this range here. Okay, in between the first candle. So that confirms our candle range theory pattern is becoming even more valid to trade. Okay, so the first condition is that we have a purge. Okay, and the purge happened at a daily key level, a key level at higher time frames. That is the second condition. All right. And now after the purge, we are looking for our entry. When you see the candle has closed, as reacted at a higher time frame support in this case, and there was a purge, and that candle closed within the first candlestick range. So what we are looking at is now entry. We are not wasting any time. We go to the 15 minutes time frame right now. Okay, so this would be an illustration of what a 15 minutes price action would be. All right, so from 4 hours you're going to your 15 minutes. You are looking to enter now the market. Look for confluence for entry. So at lower time frames now, we are at the 15 minutes time frame. For me, I usually use the 15 minutes time frame for my entry. All right, after the 4 hours, when I'm using this strategy, I use the 15 minutes for my entry, sometimes 5 minutes. This area, okay, this area here, the purge, this purge my lower time frame is exactly what it is here. Okay, this translates to this in a lower time frame. So this is our purge. Okay, and still this is our support on a lower time frame. All right, so in a lower time frame now we are looking to enter the market to take advantage so that we can buy. Okay, we can buy all the way to the end of the range here. You see the end of this candle, we are looking to buy up to the end of the range of that the candle. Okay, so we want to look for confluence here to enter the market. So we see that after the purge, this candle returned into the range. All right, returned here into the range. So we see a bullish candle, it returned and closed above here. So that would be our first indication that this is going to actually be bullish. All right, so we enter our positions here below. This bearish candle became now our order block. So when we draw our horizontal our rectangle here, this area now becomes our order block area. But now we are looking to enter the market, all right, for a long after this bullish candle here, which has broken out. So we place our trade there. We place our stop loss just below the candle which purged, below this purge here, or below support. We place our stop loss right there, and then we target the top of the range, guys. We target this top of the range up there. All right, okay, so we will target the top of the range up there. So we will only trade within this range, guys, from here to there. Okay, that is the range we are trading. So when we place our trades, we look for our confirmations. The reason why we go to a much lower time frame to look for our confirmations is because we want to catch as many pips as possible, or to enter as early as possible, so that we can maximize our profit using this strategy. So this is how you would trade in the long position. All right, you'd even place your trade just here to maximize. Okay, just after this bullish candle which closed here, the winning strategy. This is how you trade this candle range theory when you are buying. Okay, let me go over it again, because there are some who will not understand. All right, so in this case, I'm trading a 4-hour candle range. All right, which is this first candle here, so there was a purge below here. The purge is this candle which breaks below the lowest price of the first candle. All right, so that was the purge, and the purge happened at a support area at a higher time frame, which is our daily key level. This candle happened and it closed within the range after the purge. Then we go to our lower time frame, which is the 15 minutes time frame, and we are looking for entries with a bullish engulfing candle or some kind of pattern on the lower time frame, okay, to enter the market. Once we see a bullish candle, okay, we enter immediately. All right, we enter immediately and target the top of the range. Conversely, when you are selling, you do this, and sometimes a fair value gap forms. So this would be in the reverse. This would be our first candle. Okay, it's a 4-hour time frame. It's a 4-hour candle. Okay, that is the range we are going to be focusing on, analyzing on in this strategy. The lowest price of the candle here, okay, and then the highest price of the candle there. Then these are the dotted line here indicates, okay, you see this dotted line up there, that is the highest price of the candle, and this dotted line below here is the lowest price of the candle. So we are looking to trade within this range. Okay, we are trading within this range. This is the range we are trading. This is also a daily key level, because I'm using a 4-hour time frame. The daily key level will be the area that I will be focusing on to see how the price reacts. So as you can see here, when the candle broke above the highest, after breaking above this highest price of the candle here, all right, it purged. Okay, there was a purge, and that purge also touched the daily key level, which is now our resistance up here. It is a resistance level. Be our resistance level at a higher time frame. The higher time frame here in this case is a daily key level. All right, so when the purge happens and there is a reaction at the daily key level, and the price returns to close within, right, it closed here within the range. It closed within this range. Closed within this range. All right, now we have already confirmed that the purge has happened, okay, at a daily key level. It has broken above the highest price of our candle. We are focusing on the range. It has broken above. There is a purge at a daily key level at resistance, and it has returned to close within the range. Now we go to our 15 minutes time frame to enter. So our 15 minutes time frame would look something like this. Okay, I just drew this here on the screen just to illustrate to you. So it would look like this. All right, so this is our 15 minutes time frame for our entry. So in our entry, what we are looking at is, now we are searching for more confirmations or confluence, like order blocks, fair value gaps, to confirm our entry to the downside, because we are looking to sell now. Okay, because a purge has happened here. Purge has happened here, and this is our daily key level. It has been touched and the price has reversed, showing that there's a reaction here. There's selling pressure around here. So this is our order block. As I already indicated, it has been formed. Okay, the last bullish candle before the price started reversing. This is the last bullish candle before the price started reacting to the downside. So that would be our order block. Okay, so we stretch it and we mark it out. This area, it is sensitive for selling. All right, so the next confluence we have is a fair value gap. We even see a fair value gap. This is a fair value gap between this candle. I'll just mark it out. Between this candle, all right? Fair value gap between this candle and that candle, okay? This is a fair value gap, right? Just mark it out for you guys. So that would be a fair value gap, this area here, okay? From that candle to that candle, all right? There was a gap. So that is the gap that we have stretched all the way here. So that would be our fair value gap. The price usually returns to fill or to mitigate the fair value gap. It returned to close off the fair value gap before it started dropping, as you can see. Okay, so the second confirmation is a fair value gap. The more confirmations you have, the better or the higher the probability of winning using this strategy. So you can see that there is an order block, okay, and there is also a fair value gap which has been closed off. So I would actually sell at this point. This is where I would now sell. After seeing this reaction with a long wick, I would be selling here, okay? I would be selling here and place my stop loss just here, above here, okay, above the purge, and I will target the range, okay, sorry, I will target the end of the range right there. This is where I would target, and I would close off at the end of that range. This is how you would trade this candle range, and all this price action that is happening in between here, it's happening in between the first candle range. That's why we call it a candle range theory. You are trading only within this range, only within that range. So that's why you sell from here and you get out immediately. The price gets to the lowest price of our candle of focus, which is our first candle over here. All right, so we are trading within that range. So this is how you would use this theory to actually trade and win in the market. All right, so this is a very profitable strategy that you can employ in your trading to win. All right, I hope you have understood. Only trade within the range of the candle that you have chosen. If you have chosen the 1 hour candlestick range, all right, trade within that range and make sure you enter at very lower time frames. For example, if this was a 1 hour time frame candle, all right, you'd enter at 1 minute or 5 minutes, all right, 1 minute more preferably, so that you can get a more sharper entry, so you can catch more pips to the downside. All right, okay, so in this case also, just to go back, this would be the range you would trade. You trade only within this range. You are trading only within that range, okay? So this would be your exit, okay? You exit your trade there and you enter your trade as early as possible inside, or when you get confluence, like in this case, at the order block, okay? This would be your entry. All right, so this is how you would trade this strategy. It's very effective when you employ it in your own trading. All right, thank you very much for watching my video. Consider subscribing to my channel, and if you have found value in this content, consider liking this video. Just comment down below your suggestions and give your opinions, and I'll be answering your questions in the comment section below, and also I will be able to help you out. Thank you very much. See you next time. Bye.